Welcome back. We have Rajesh Bhatia now joining us, Managing Director and Chief Investment Officer at ITI Long Short Equity Fund. Rajesh, good morning. Thanks a lot for joining us. Now, the market showing some signs of overheating, right? Going purely by the indicators, but the price action is supreme. So how do you approach a market like this? Do you sort of get cautious or stay with the momentum?
So if you're a trader, my sense is that you need to, keep your longs at this moment. Definitely from a risk return perspective, the market is less attractive. I think the valuations now are at about over 19 times financial year 24 earnings. So this bounce back has certainly made the market a little more pricey. Having said that, given the construct and given that we are not at this moment at least seeing a negative catalyst. So until a catalyst emerges, my sense is this momentum will be on the upside. So we'll have to watch out for what negative catalyst does come. In terms of whether commodity prices start kind of going up, whether the market suddenly realizes, look, all these commodities that have gone down is all thanks to global growth coming down sharply, and that's going to impact India as well. Whether defaults start going up globally, interest rates going up and economic slowdown is a good construct for defaults for corporates as well. So require some negative catalyst for this market to kind of cool off or come down. Otherwise, my sense is even though you can have some bouts of correction, I think the momentum at this moment is on the upside, at least tactically speaking.
Rajesh, hi, morning. What could that catalyst be to your mind?
Yeah, so, as I pointed out, I think commodity prices, they could start kind of going up. I think some of the agri prices have kind of bottomed out and they have started kind of going up. Energy inflation, I think it's still out there. From whatever we read, a lot of the inventory for a lot of commodities are really low. So whether there can be a spike in other commodity prices. And listen, this construct, why has inflation cooled off so much and why has inflation narrative become such a less bother for the markets? It's because global growth is really sulking. Whether it is China, whether it is Europe, or now even the US, if you accumulate all of these countries which are facing growth pressures, that would be over 60-70% of world GDP. So, the narrative, I think, will soon move from inflation to growth challenges. So I think those are some things that you need to watch out for this catalyst to come.
Okay. Rajesh, good morning. I wanted to ask you a little bit about some of the sectors that have been big movers. This week, auto stocks have been, hitting new highs, whether it's M&M, Eicher Motors, TVS, Apollo Tyres, and some of these stocks like M&M have gained 50% this year already. How are the valuations stacked up now, and do you think the risk reward is still favorable to buy into these names?
So I think, yes, I think valuations are getting, again, stretched on a risk return basis. There is no question about that. I think, like I said, you also have to consider the demand supply equation in India from a market perspective. See, our mutual funds have been continuously getting money, even though there may have been some slowdown. The inflows have continued. And even marginal buying by FIs means that the demand supply skews to the demand side. And therefore, you see very sharp rallies on the upside. So on the auto part, basically, there is greater visibility now with semiconductors becoming less of an issue, with raw material prices kind of coming down. There is greater visibility of volume growth. And there is also, order backlogs for, let us say, cars, for some select two-wheelers or SUVs. So there is greater visibility of volume growth as well for the markets. And that's really what is driving these stock prices. Having said that, risk return is definitely becoming less attractive as you move forward.
Okay, that's on the autos. Risk reward perhaps is now not as good as it was. What about the IT space? Is the risk reward still in favor now, despite the recent rally, Rajesh?
So recently I met an IT company and I asked them, what is your number one challenge? And they say manpower. So I said, is it not demand? So they said, no, demand is not a problem. It's really manpower. Although the market is a lot more focused on demand side of the equation, given that US is slowing down sharply, they are baking in lower top line growth. My sense is, as far as IT is concerned, some cooling off of demand may probably be good for their attrition or manpower cost inflation as well. Attrition, we understand, has started to kind of cool off, and that's a positive. And if there is a soft landing in the US, then my sense is IT stocks can continue to kind of do well. So it really depends upon the narrative as to where US is going, whether it is a soft landing, which is really the base case at this moment. But in case the narrative changes to a deep recession, then my sense is that there is still a possibility of a larger or a 15-20% decline in IT stocks as you move forward.
Rajesh, earlier you were talking about domestic mutual funds getting flows, etc. Just a flow question, really. We've seen such large blocks recently, right? There was Sona, there's Max, there's Loda, there's many others which have happened. Crompton, for example. Is this? I mean, what do you make of all of it? And any takeaway at all from what you're seeing out there? And does the flow number, the daily flow number, add up? I mean, not all of it does count as FI. I mean, FI selling, etc. I mean, in the case of Max, for example, KKR was a co-promoter, but there's a fair bit of buying. It's all getting absorbed quite easily.
Yeah, I think a lot of the buying also is taking place from the domestic guys. You could argue that FIs are finding an opportunity that when the markets have gone up, are offloading at this moment. I don't know whether that's the smart money. They had been smart selling in October, November, December onwards, given the risk return for markets had become unfavorable. Our India money is, continuous. So that kind of absorbs all of the supply. It is not really determining risk return of markets, because the money is, if you talk to a mutual fund manager, he says, my challenge is every day I get money. I need to deploy that money. So that is not as risk return aware as let us say the FIs are. So we'll see how that evolves. But my sense is that FIs are at this moment seeing that as markets have kind of gone up, we are taking some money off the table. Also, I think, there's a huge pipeline of IPOs, but they are not coming, my sense is, because when all these investment bankers are checking with foreigners, they say their appetite is low to invest in IPOs at this moment. So for whatever that is worth, that's how the feeling is from the FI desk.
Okay, just stay on. We need to, just address some corporate news. We'll come back to you in a bit.